Welcome back to Talk for Impact, where we connect big ideas with big hearts. This is episode 7 of our business series, Financial Planning for Business Owners. I'm your host, Yaya, and joining me today is Caroline. Now, Caroline, let's be honest here. When we talk business, often the exciting part is the idea, right? The customers, the creativity.
Oh, absolutely. That's the drive for most entrepreneurs, the vision.
Yeah, the vision. And then there's the financial side, numbers, spreadsheets.
The stuff that maybe feels a bit less glamorous.
Exactly. Can feel a bit like, homework sometimes.
That's definitely a feeling I encounter. People are passionate, and the financial structure, well, it can seem secondary.
But it's so crucial, isn't it? We hear it time and again, great ideas can stumble, often because the money side wasn't clear.
Precisely. So that's our mission today, really, to unpack business financial planning.
Right. Cut through the jargon, get to what you actually need to know and do.
Think of it as a deep dive into the engine room of your business. We're not just scratching the surface.
Okay, so what are we covering? What's the plan?
Well, we'll look at the key parts, the elements of a good plan. We'll also cover common mistakes people make.
Good. The pitfalls.
Yeah.
And how to avoid them.
Exactly. And pull in some advice from, well, some pretty successful people and finish with a practical challenge.
Love a good challenge. So first up, why does this even matter, especially for, say, a smaller business? Feels like maybe it's just for the big players.
That's a common misconception. It's absolutely vital for everyone. Think of it as the GPS for your business decisions.
Okay, GPS. I like that. So it guides you.
It does. Without it, you're kind of flying blind, making guesses instead of informed choices.
Makes sense. So beyond just knowing if you made money last month, what are the big advantages?
Okay, first big one, managing cash flow. This is like the absolute lifeblood.
Cash flow, we hear that term a lot.
And then for good reason. You could be making sales, technically profitable, but if cash isn't coming in when you need it for bills, big trouble.
Right, like waiting on invoices but needing to pay suppliers now.
Exactly that. Financial planning helps you see those gaps, the timing issues, so you don't suddenly run dry. It anticipates the ebbs and flows.
Okay, so timing is everything with cash flow. What else? Why else plan?
It lets you forecast growth, plan how you're going to scale up.
So looking ahead, when to hire, when to invest in new equipment, that kind of thing.
Precisely. If you understand your current numbers and can project realistically where you're headed, you can make those big decisions with more confidence, not just on a gut feeling.
Okay, so managing the now, planning the future.
Yeah.
What else?
Building resilience. Planning helps you prepare for unexpected expenses.
The curveballs life throws at you.
Exactly. A machine breaks down, a key client pays late, market shifts. A good plan includes a cushion, a reserve, your business rainy day fund.
Like a personal emergency fund, but for the business.
You got it.
Yeah.
And honestly, the final point, peace of mind.
Oh, that's a big one.
It really is. Knowing your numbers, understanding where you stand financially, it just reduces that background anxiety, lets you focus on actually running the business.
And you said something earlier that stuck with me. Businesses often fail because of cash flow, not bad ideas.
It's a hard truth. Brilliant concepts, great teams, they can still go under if the cash management isn't there. Financial planning is your shield against that.
Okay, so the why is clear. Let's get into the what. The 5 key elements of a solid financial plan. What are they?
Right, the pillars. First up, revenue projections. Estimating your income.
Okay, estimating income. But how do you do that without just, guessing wildly?
Good question. It needs to be methodical. Break it down by product, service, whatever makes sense for you. Look at your pricing, your sales funnel.
Use past data if you have it.
Definitely. And maybe create a few scenarios, like a realistic case, a best case, maybe a slightly pessimistic one too. The key is being honest and, well, maybe a little conservative. Grounded optimism, as you said.
Grounded optimism. Got it. What's element number 2?
Cost forecasting.
Right.
This is the other side of the coin, projecting all your expenses.
Right, what goes in?
Exactly. And it helps to split them. Fixed costs, the steady ones like rent, salaries, software subs.
Predictable stuff.
And variable costs, the ones that change with sales volume, like materials, shipping, maybe some marketing.
Why is splitting them helpful?
Because it helps you figure out your break-even point. How much you need to sell just to cover everything. If fixed costs are $1,000 and you make $10 profit per item, you need to sell 100 items just to break even. Knowing that number is crucial.
Okay, revenue projections, cost forecasting. What's number 3?
This is the big one we keep mentioning, cash flow planning.
Here we go again. Okay, emphasize it.
Seriously though, Profit is great long-term. Cash flow is survival day-to-day. It's all about the timing of money in versus money out.
The bakery example, profitable sales on paper, but no cash for rent.
Exactly. You can look good on the profit and loss statement, but still crash if the cash isn't there when the bills are due. It's your early warning system.
How often should we look at cash flow? Really monitor it.
I'd say weekly, ideally, minimum, just to catch dips early. Spreadsheets work fine to start, or, tools like Wave, QuickBooks have features for this.
Okay, cash flow, cash flow, cash flow. Got it. Pillar number 4.
Understanding and managing your profit margins.
Okay, how do we calculate that simply?
Simple formula. Take your total revenue, subtract your total costs, then divide that number by your total revenue. That percentage is your margin.
So revenue costs revenue.
Yep. Higher percentage means more profit kept for every dollar earned. And what's interesting is small changes in price or costs can really impact this margin over time. So you got to watch it.
Keep tweaking, keep monitoring. Makes sense. Yeah. Okay, that's 4. What's the 5th essential element?
The 5th is setting up dedicated emergency and growth funds.
Saving with purpose. Tell me more.
2 parts, really. The emergency fund is your safety net. Aim for, say, 2-3 months of essential operating expenses in there. It's your buffer for those unexpected hits.
Buys you breathing room.
Exactly. Then the growth fund is different. That's money set aside specifically for strategic moves.
Like what? Marketing pushes? Hiring someone new?
Yeah, or developing a new product, expanding. Stuff that fuels future growth. Having it ready means you can jump on opportunities without scrambling for cash.
So one fund for security, one for opportunity. Smart.
That's the idea. Build stability and potential.
Okay, those are the building blocks. Now, let's talk mistakes. What are the common traps business owners fall into with finances? Knowing what not to do is useful too.
Oh, absolutely. Avoiding these saves a lot of headaches. Number 1, probably the most basic, but so common, mixing personal and business finances.
Just don't do it.
Please don't. Separate accounts, period. It makes everything clearer, tracking, taxes, understanding business health, everything.
Seems simple, but easy to let slide early on, I guess. What else?
Another big one, especially for founders, not paying themselves.
Treating themselves like volunteers.
Kinda, yeah. Or just thinking all profit is their pay, or reinvesting every single cent. Look, you're working hard, providing value. You need a consistent salary, even if it's small at first.
And it gives a truer picture of the business's health. Right, if it can't afford to pay you anything.
That's a huge point. Yes, it tells you something important.
Okay, pay yourself. What's another common mistake?
Underestimating taxes. Oh boy.
Forgetting Uncle Sam wants his cut.
Pretty much. You see that revenue number, but that's not profit. A big chunk is owed. Not planning for it leads to nasty surprises and cash flow problems later. Plan for taxes regularly. Monthly, ideally.
Set it aside as you go. Got it. Another one.
Ignoring debt or interest. If you have loans, credit cards, you have to track the interest. It adds up fast and eats into profits if you're not managing it.
Don't stick your head in the sand about debt.
Never works. Be proactive. And one last one. Avoiding financial tools.
Thinking it's too complicated. Need an accounting degree.
Yeah, that kind of thinking. But modern software, Xero, QuickBooks, even good old Google Sheets. They're designed to be user-friendly. They automate stuff, give you insights, save you time, and ultimately, money. Don't be scared of them.
Use the tools available. Good advice. Okay, avoiding mistakes is key. Now, let's draw on some wisdom from the top. What can we learn from financial gurus or even billionaires?
Yeah, some great perspectives here. Warren Buffett's famous quote, "Do not save what is left after spending, but spend what is left after saving."
How does that apply to business?
It means prioritize. Pay yourself. Put money into your emergency fund, your growth fund first. Then figure out other spending. Be intentional.
Save first, spend second. Proactive, not reactive. I like it. What about someone like Barbara Corcoran?
Barbara Corcoran is blunt. Every great entrepreneur is good at numbers.
Oof. Pressure's on.
Haha. Well, it doesn't mean you need to be a math whiz. It just means you must know your key numbers, your margins, your break-even, your costs. Know them cold. Understand the financial pulse of your business constantly.
Not just a once-a-quarter thing. Constant awareness.
Exactly. And Damon John says, if you can't measure it, you can't fix it.
Makes sense. Apply it to finance.
Set financial KPIs, key performance indicators, monthly revenue targets, cost per customer, profit margin goals. Track them. Measure them. That's how you see what's working and what needs fixing.
Data-driven decisions.
Yeah.
And Mr. Wonderful, Kevin O'Leary. He must have something to say about money.
Oh, he does. His big one. Cash flow is everything.
There it is again.
He pounds this point home. Profitability on paper doesn't matter if you don't have the cash to operate. It reinforces that critical need for liquidity. His bluntness really drives it home.
So the themes are clear. Know your numbers deeply, save intentionally, measure what matters, and never forget cash flow.
Powerful lessons from people who've made it work.
Okay, fantastic insights. We've covered the why, the what, the mistakes, the wisdom. Let's make it super practical now. You mentioned a 4-week challenge.
Yes. Something actionable listeners can start, like, right now, to build momentum.
Awesome. Lay it on us. Week 1.
Week 1, foundational. Action 1, separate business and personal finances, completely. Action 2, open a dedicated business bank account if you haven't already. Simple but crucial.
Get the structure right. Okay, week 2.
Week 2, get clarity. Task 1, create a detailed monthly budget. List all income sources, all recurring expenses. Task 2, get that snapshot of what's actually happening financially right now.
Know where you stand. Week 3.
Week 3, active management. Action item 1, build a basic cash flow tracking system, spreadsheets, software, whatever works. Start monitoring it. Action 2, set specific revenue and expense goals for the next month. Make it concrete.
From passive to active. I like it. And week 4.
Week 4, build resilience and optimize. Action 1, plan for regular savings. Start building that emergency buffer we talked about. Action 2, review all business subscriptions. Anything you don't really need or use, cut it. Trim the fat.
So create safety and increase efficiency.
Nice.
What's the outcome after 4 weeks of this?
Look, you won't solve everything in 4 weeks, but you'll have built critical habits. You'll understand your money better. You'll be tracking cash flow, setting goals, building a buffer. It brings a huge sense of control and, frankly, confidence.
That sounds incredibly valuable. A great starting point. Okay, let's quickly recap this deep dive then. We hit why financial planning is vital for all businesses.
Not just the big guys.
We broke down the 5 key elements: revenue projections, cost forecasting, cash flow planning, profit margins, and those emergency and growth funds.
The core components.
We flagged common mistakes like mixing funds, not paying yourself, underestimating taxes, ignoring debt, and avoiding tools.
And how to sidestep them.
Shared some powerful advice from the likes of Buffett, Corcoran, Damon John, and O'Leary.
Know your numbers, manage your cash.
And wrapped up with that practical 4-week challenge to get started right away.
It really is about building financial literacy for sustainable success.
Absolutely. Join me next time for episode 8, The Role of AI in Modern Business, where we'll look at how artificial intelligence is reshaping how companies work, market, and grow. Until then, stay smart, stay intentional, and keep making an impact.